we have got to look at this chart. This chart is so telling. Look at what this chart says. This is household real estate value and household mortgage debt as a percentage of GDP, because the right question to ask is always compared to what? And if you saw this without the reference to GDP, in other words, the size of the economy, how much the economy has grown or shrunk at the various times, it would lack important reference. So let's go into it. And you can see here that there is a lot of equity in the housing market. More equity means more stability and safety for the market. Now, what's interesting though is on a personal level, we recommend that you have the properties more leveraged. But on an aggregate level, what does it mean for the marketplace since most people don't know how to use leverage properly like you do? Well, it is better to have more equity in the overall aggregate market. But from our level, we want to have more leverage because we get more inflation-induced debt destruction and we get that multiplier effect, which is so critically beneficial and so critically important. Okay, so what does this chart tell us? Well, if you're looking at the screen, you see it says mortgage debt is up by $2.23 trillion. Now that would sound like, oh my gosh, everybody's so over leveraged. And that's from the peak of the housing bubble. But as a percentage of GDP, it is 46.8%, down from the last quarter and down from the peak of 72.3% of GDP. So this is really a staggering difference. This means that equity is way up and debt is way down. Mortgage debt. We're only talking about mortgage debt here, right? We're looking at virtually half. The number is half, basically, of what it was at the housing bubble, right? So that means most homeowners have large equity cushions in their home. And I added this arrow to the chart to show you just how big this delta is. It's absolutely staggering, and it shows that people are extremely comfortable with their housing situation and their housing mortgages. Okay, and we've gone into, the debt payment amount and so on and so forth before many, many times. Now, if you want to have more control of your income properties, if you want to reduce expenses dramatically, if you want to get much higher deposits from your tenants and have tenants that are more at stake in taking care of your property and making sure they honor their lease obligations, go to fireyourmanagers.com and join us because our class is underway. And the last session we had last week was excellent. This session, which we are having the next session, a couple of our students are bringing their own properties where we are going to actually work on their specific properties, their tenants, their situations, and help them gain more control, reduce expenses, and have a lot less management responsibility. Go to fireyourmanagers.com and check that out. I want to thank one of our listeners, Johnny Reck, for sending this chart in, which was also very telling. And it is median sold price by bedroom count. Now, obviously, in the vast majority of cases, if you have more bedrooms, you're going to have a more expensive house. But what has happened with the price differences over time with price ranges and bedroom count? Now, I do want to say this is not a super scientific chart. It's from Rocket Homes, and it does really tell a good story that you need to be aware of. This chart tells us an interesting story because it shows the delta in terms of the appreciation difference in low-end properties versus high-end properties. And so you can see that the price change of these lower price properties is dramatically significant, right? Look at this price change. In one-bedroom properties, because they are at the entry level of the market, they've literally doubled in price. Okay, then you look at two-bedroom properties, and they are up by 49.6%. You look at three-bedroom properties, which would be what most people would consider to be like the ideal rental property, that three-bedroom property, that three-bedroom, two-bath home, right? Or maybe 2.5 baths. If it's 2 stories, it's going to have 2.5 baths most likely. And they are up by 74.7%. But you go up the price range and subsequently up the bedroom count. 4-bedroom properties at $473,500, up less by 29.9%, and 5 or more bedrooms with a sales price of $725,000, only up by 17.9%. So it's really interesting, and this really bears out what we've been talking about for many years, is that you are better off in these entry-level priced properties because they have more upward pressure, both on rents and prices. However, I must say, I have been surprised that the higher end properties have done as well as they have. That has surprised me. I did not think it would be as good as it has been for those properties. So, and for example, New York City, as much of a disaster as it is in so many ways, that market has surprised me. Some of the cyclical markets on the California coast have surprised me at how well they have done. But again, the markets we've been recommending have done much, much better than that. So be sure to follow the show, the YouTube channel, and of course, on the website. Be sure to be on our newsletter list where you can get much more detail on all of these great subjects that we discuss.